Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, president of Universal Accounting Center for nearly 3 decades. And now I've been working with accounting professionals to help them both start and build successful accounting, bookkeeping, and tax businesses. It's here on this show that we actually address various things that you need to be considering as it relates to your business, whether you're starting or building your firm, because we're going to be talking about things that go from marketing, selling, pricing, tech stacks, training your staff, giving them the skills that they need to offer quality accounting services. We're looking at how to onboard clients effectively, retain clients, perhaps even your mental health. Each and every week we have on the show various experts to actually share with us the insights that we need to consider so that we can in fact have the premier accounting firm in your area. Now, with that being said, I'm excited to have on the show today someone that I've been looking forward to speaking with for some time. It's Mark Martukovich. He happens to be the executive director of Business Advisory and Accounting Partners powered by Harness, where he actually helps lead an advisory-led firm focused on proactive tax strategies, year-round planning, and helping businesses make far better financial decisions. With more than 30 years of experience across accounting, commercial banking, business development, and consulting, Mark brings a rare blend of technical insights and real-world business perspectives to the conversation. He is a widely recognized leader as a thought leader in the profession, as someone with more than 9 years speaking for Thomson Reuters at partner summits, advisory symposiums, and synergy events, where he shares practical strategies for firms to move them beyond reactive compliance and into scalable, high-value advisory relationships. Mark is known for turning complex tax and advisory concepts into actionable ideas that help firm leaders grow, adapt, and better serve their clients. His leadership has actually helped shape a modern advisory model centered on tax strategy, operational discipline, and long-term enterprise value. So, Mark, welcome to the show.
Roger, thank you for having me. I appreciate you having us on here.
Yeah, this is going to be a wonderful conversation. Something that I'm very excited to discuss with you is advisory. But before we get there, share with my audience your journey as to why in the world did you become a CPA?
Yeah, so I got my license right out of college. I grew up in Ohio, went to the University of Akron, and got my license because it was the thing to do. Accountants were, easy to get hired and so on and so forth. But I took a different path to being a firm owner. I went in the private sector first. So I did a number of different jobs, from accounting manager to stock brokerage house to actually getting into accounting management and a director of IT for a magazine wholesaler. And eventually the IT kind of took over. So I got out of accounting and became a project manager for that company, and then got into e-commerce, believe it or not, when Al Gore invented the internet back in the mid-90s. Was working for the college textbook industry and got into helping firms or bookstores kind of ward off Amazon when they were encroaching on everybody's business there. Got into presenting on educational topics in that area. Moved down to Florida, got tired of being on the road. So I said, all right, let me try something different. So I ended up becoming a commercial banker. And because I knew my way around the tax return, I was pretty good at presenting, pretty good business development, did that for a number of years. And then I met the guy that started our practice when I was a banker. And we used to refer business back and forth. And when I was in banking, one of my frustrations was working with businesses that had an accountant that only focused on minimizing taxes. And so when I tried to give them a loan and saw their tax returns with no profits, it was a frustrating conversation. So it's like, I wanted to do something different. And when I met the guy that started our practice, he approached me at one point and said, hey, listen, I've got an opportunity to buy a small practice. You've got some tax experience. You got some banking experience. You want to go in with me and buy this practice and then eventually be my successor? I said, yeah, sure. Let me give it a shot. So I did, and I did it part-time for a couple of years. And then I decided, you know what, I got this opportunity to own a practice and help people in a different level. So I left banking, became a full-time owner of the CPA firm. And then when I came into the firm, I had to support my fat banker salary. So I ended up going out and buying 3 more practices to build up the value. And so we had a firm back in 2013 timeframe that was very highly transactional. We were doing a lot of tax returns. At one point, we were processing 2,400 tax returns, and I was reviewing 2,200 of them. Not fun. It was very difficult and challenging, and I couldn't have the conversations that I wanted to have with clients. And so I was trying to figure out, all right, how do I do it differently? What do I should do to get off this hamster wheel and change the conversation? And so that's when I had gone to a presentation put on by Thomson Reuters Partner Summit, and they were telling CPA firms, hey, you need to become more of a business advisor and less of a tax preparer. And you know what, that resonated with me. It's like, you know what, this is what I want to do. And so I ended up joining their program called Practice Forward, and I modeled our firm around advisory services. So that was the birth of what we do now today, is leading with advisory services. And so we engage with clients very differently than we used to. It's less transactional. We were very reactive. Now we are more proactive with our planning. And quite honestly, the relationships that we have with our business owners are much more engaging. It's a two-way street. We're providing value for them. They're getting a lot out of it. We enjoy it. And we've been very successful in the model, and we've transformed our firm into one that leads with advisory services rather than tax planning or tax preparation services.
I love that explanation, and I appreciate you sharing the story. One of the things I want to go back to, and this is just one of a few things that I'd like to ask, you spoke of purchasing the firm and then realizing that you needed to acquire some additional firms, and you purchased 3 more.
Yeah.
When you were purchasing the firms, just at a very high level, what were some of the things that were very important to you to see in an organization that would cause you to feel comfortable purchasing it? And how did you then determine the valuation that you were willing to then offer for that firm? So did you have a criteria that you were using? Do you recall what that was?
I do. And back at that time, we were really just looking for value. And historically, CPA firms transacted on like a top line multiple of revenue. I think at that point, we were paying like 1.15 times gross. And that was just the way you did it. So we were looking with enough volume that could support the salary that I was making. And we were looking for some staff because I wanted to expand and do things differently. Of course, at that time, we were very geographically centered. So we were looking for firms within our market, but we were also looking for people that wanted out. And back then there were not as many as there are now that want to get out of the profession. But we were very highly targeted with firms that had similar kind of clients. We wanted to deal with people that had businesses that had, some good book of business. We also found out that in my firm historically did not do a lot of bookkeeping, but we bought one practice that did. And we found, this is a good sticky factor because people interact with you more than just a once a year time. You do the books, you're talking with them often. So that kind of led itself really good into the advisory model that we developed. So that was really the big thing. We were trying to get enough volume. Today, we view it much differently, though. CPA firms, and we have flipped the conversation when we talk to people that want to acquire, or when we're looking to acquire. It's more of an EBITDA-driven conversation, which is where it should be. Because if I'm investing in a practice, I want to get paid back on my investment. So that really leans really well into the fact that we have a firm that's much more profitable because of the advisory services that we have, rather than the transactional business. And we have a sticky factor to those client relationships. So, firms that are looking to exit or looking to build up need to focus on the sticky part of the relationship. And that's not just the transaction of a tax return every year. That's the ongoing advisory that you can provide.
I'm loving this. This is great. So just to highlight a few of the things that you mentioned, that years ago in the acquisition, it was top line revenue that it was based upon. Right. You are right. It's typically a range of about 0.8 on the lower end up to about 1.3 on the higher end. You were transacting at a 1.15. So I get what you were describing there. As to determining the valuation, that range that I spoke of, many people will actually throw 3 things into consideration with that. Clearly, it's the client base. Is this recurring revenue that's bookkeeping services that's generating that revenue, or is it annual clients that's just tax revenue, one-time services? That determines whether or not you're going to be charging someone, or offering someone 0.8 up to the 1.3. The second consideration isn't the clients, it's now the staff. It's whether or not you've got qualified individuals in there to actually do the work, because you're hoping that they're going to stay, that they're going to be able to continue to do the work. You don't want to hire the client or acquire the clients and not be able to do the work when the transaction's done. So you want to have these people that are quality and competent. The third thing would be not just the standard operating procedures, the processes that are in place. You don't want this all in somebody's head. You want to have systems in place. But it does come down to today, the technological integration. Technology is a big part of this. And if you can acquire a firm that's using the same systems or tools that you're using already, then the integration is going to be a lot easier than, they're using a tax software that's different than our tax software. They're using Xero instead of QuickBooks. I mean, all of a sudden you're acquiring a firm and it's just this headache of trying to transition and absorb these new clients. So that can actually then attribute to, this is more valuable to me because you're on the same systems I'm using. You're using Xero, I'm using Xero. You're using Drake, I'm using Drake. And all of a sudden, it just becomes a little bit easier. Therefore, it's a more valuable transaction. But the point that you made at the end there of now evaluating the business on EBITDA, when you're actually doing advisory services, the profit margins can greatly increase. And so no longer is it just simply a revenue question of the business. That business can be extremely profitable with so much more going to the net profit that all of a sudden there's more to be discussed than just top line revenue. Is that fair to say?
I 100% agree with you, Roger. In fact, when you look at two firms side by side and you look at the one that may be very highly transactional, you're going to get closer to that 0.8 times growth, if you're evaluating it on that perspective.
Yeah.
Our firm, for example, has 60 to 65% of its revenue that's tied to recurring maintenance agreements that are advisory focused. Okay, so tax returns plus accounting review plus advisory. And we did something last year that was very important. We put people on 2-year agreements instead of 1 year. So that recurring revenue is very predictable. Now, the tax returns are generally going to be predictable, but if you're just a firm that focuses on tax preparation, you don't know that client is your client until they walk in the door in the springtime with their stuff, right?
That's right.
So how do you know? But when we put people on maintenance agreements, we call them, we get it on a cycle where they're billing in advance, paying for us in advance, paying monthly. So we know starting in July who we're going to be doing the work for in the upcoming spring. Plus we have all the planning built in. And these are planning services that we might have given away. If somebody asks us a question, we give them the answer and we don't charge them for it, right? Now we build that into the engagement. So we're getting paid for that knowledge that we know we're going to have to give them when they have questions. And so that makes a big difference. And when you look at the valuation of a firm, and very recently we went through a transaction where the company that we were dealing with valued our firm and they split how they valued it. They took that which was tied to compliance, because we still have legacy clients that are transactional, and they applied one factor of EBITDA on that. Yep. And then they applied a different factor to that which was tied to advisory services. And it was a big bump. It was more than 50% higher on that advisory-based book because, like you said, this very highly profitable. We're getting paid for the knowledge. We're getting a premium for that, and it's consistent. So that drove our valuation up. It was 30% over my last offer that I had, and it made a difference.
Oh, this is a wonderful conversation. I'm going to go even a step further with you because I think this is wonderful. So for my listeners, just to take it down to that level of the client and customer, I do actually distinguish between what is a client and what is a customer. A customer is somebody who comes in annually and gets a tax return done. I don't have an interaction with them other than that annual experience. The client, however, is a ongoing relationship. It's an engagement, as you mentioned. Yeah. That engagement or that agreement is actually one that monthly occurs. There's the recurring payments that are going on. It's contractual. You've got them with a 2-year agreement that's in place.
That's right.
So this is a totally different relationship than that customer I'm seeing once a year. So if I can take now some of those transactional things, whether it's bookkeeping services on a monthly basis, all the way up to accounting, perhaps CFO, advisory, tax strategy type clients, those packages are now contractual. Yeah. They're with clients and they're recurring. So now I'm going to take those clients that I have, not the customers, the clients, and I'm going to compartmentalize them into 3 groups, A, B, and C. Yep. A are going to be a certain revenue range. Let's say they're my premium package. They're paying, let's say, and I'm just going to throw out numbers for the fun. Let's say they're paying $2,000 a month. Well, that's different than my B clients who are paying $1,000 a month, or my C clients that are paying $500 a month. Yep. The second thing is for A, B, and C, I want to know how long have I had the client? Well, I've got a client that I've been working with for 5 years, and I've got somebody I just onboarded 2 months ago. And so you get these ABC rankings. And to your point, all of a sudden, when you're getting the valuation, there's going to be a different value placed on that A client versus that C client versus that customer that comes in once a year for a tax return, even though they've come in for the last 3 years. So this is very helpful to simply say there's a far more strategic way to value a business, both on the purchaser side and more importantly on the seller side, than just simply top line revenue.
I agree. And taking that one step further, all of those clients, as you call them, it's important to have kind of a roadmap of where you're going with that relationship. And I always tell people when I'm presenting and talking about business owners, and I think you would agree with me, Roger, 100% of business owners are going to exit their business at some point in time, right?
Either that or close the door, yes.
Well, they're going to exit. So what we try to do is help those clients define what that exit looks like, what their time frame is, and then we are working with them to drive the value of that business up over time so that when they have that exit, they're getting a premium or getting a better number. Because most people, when they think about what their business is worth, they think it's worth this, right? The reality is it's worth this. And it's our job to kind of close that gap as much as possible. And so that's part of the advisory execution roadmap is us figuring out what are those elements that drive value in your business and how do we help you from a tax efficiency standpoint, but also from just being a better business owner and profitability standpoint, how do we get you to that number that gets you that better outcome, right?
That's right. Yeah. You're reverse engineering that exit. And I like that because you're basically saying, what is it that you think your business is worth? What do you feel it needs to be worth for your retirement or exit?
Right.
And now you have something to work towards because right now I'm just working. I'm not working on my business. I'm just working.
Right.
And in that context, yes, I'm making a good living and I'm perhaps being paid well. But that doesn't mean from an outside perspective, somebody sees that same valuation that I see.
That's right.
So what you're doing is you're actually now having a conversation with that firm owner to say, what is it that you want? Let's reverse engineer it. And what's the quickest way to get there? I can either grow a ton of C clients and it's a volume thing, and I just want a lot of those, or I could get fewer A clients and get to that multiple that much faster simply because of the fact that those A clients are so much more valuable.
Yeah. When you think about it, in terms of the number of clients or customers that you might have, if you have 10 A clients and you have a few touch points a year with them, you can replace 10 or more customers with those that have almost as many touch points when you talk about delivering a tax return and what's all involved there. And so the volume of work that you have is actually less, but your profitability goes up. You know, years ago at the high point, we were at 2,400 tax returns. That's what we did as a firm. That's kind of how we gauged our successes. We were doing a lot of tax returns. This last year, we are going to do 1,700 tax returns. Now, if I just came to you and said, I was doing 2,400 tax returns, now I'm doing 1,700, you'd be like, what's the problem? I said, there's no problem. I'm more than double in profitability with fewer touch points, and my staff is not working as hard as they did when we had that big volume. So that's another thing is kind of the quality of the work and the volume of work is different. They're much more engaged, and the staff is just, they're not as burned out as they used to be because of that.
Yeah. There's definitely a hustle at that compliance level work that's being done at the bookkeeping and tax preparation level that's totally different than when you're doing the advisory work, whether it's tax strategy or business advisory.
Right.
So yeah, I completely agree. Let's go a little deeper into this part of the conversation because I know you do speak of this.
Yeah.
There's a lot of conversation about value add. You spoke of going to the conference and hearing you need to actually move into this advisory space.
Yeah.
And for me, I was attending conferences for years and hearing that same message, no one explaining how. And I was just wondering, could you explain what is advisory in your own terms to help my audience understand how is it different than perhaps bookkeeping, tax, preparation, and let's say accounting? What is advisory?
Yeah, it seems very nebulous, or over the years, a lot of companies have been talking about firms that need to get into advisory. And a lot of firms put it out there. Hey, we offer advisory services. We do this and that. The reality is most of what the advisory services that they offer are ad hoc and reactive. Okay. And that's where a lot of firms fall short is they don't have a defined roadmap for the execution of advisory. And it starts with knowing what you want to provide and need to provide and having an outcome that's proactive in nature and not reactive. So, historically, again, people would ask us, all right, I'm making all this money. I don't want to pay a lot of taxes. What do I do? Okay. And so then we dig in and look at the returns, say, okay, you can do this, this, and this. But again, it's all after the fact. It's like, you could have done that this year or last year. We want you to do it this year. We send them on their way and then hope that when they come to us next year that they've done it. Well, the reality is most of the time they didn't. And so what we ended up doing is said, listen, we don't want to have these conversations with clients all the time. We know we're going to get a certain set of questions from every business client. They're going to be those quick questions that we always get, and we got to answer them and never get paid for them. And so what we did is we defined what it is 80% of the businesses are going to ask us. And that became our upfront advisory best practice, kind of game planning, and just teaching a business how to behave like a business upfront advisory service. And so we defined that, we put a number to it and said, this is what we're going to charge for this because you need it. Now, historically, as a firm, we never charged an onboarding fee. We would just take them in and eat the cost of onboarding them because we wanted the business and wanted the client. Well, now we know we have something that business owners need. There's value in those conversations. We're going to get paid for it. And so we put it out there. And surprisingly enough, when I first tried to sell it, I said, okay, I don't know what to charge for it. So I said, I'm going to pick a number. Pick the number. And I was getting ready to deliver the proposal, put it together. I'm like, there's no way they're going to pay me this for this. So what do? I cut it in half. All right, good. I'm going to go out there and go with this proposal, and I'm going to suggest that they pay us up front. And when I was given the proposal, my hair is on edge, trying to, I don't know if they're going to do it. I'm getting nervous and sweaty. I showed them the number and they didn't even bat an eye, and they were like, okay, that's fine. And then moved on. Okay, we're going to do this from a maintenance perspective. So the bottom line there is, there are some consistencies and some things that you can do to productize advisory services, all right? Because that there's certain questions that everybody's going to have, and you always get them after the fact. So why not put it together into a program and charge for it because it works? People want it. There are so many business owners that come to us looking for a new relationship because they're not getting answers from their accountant. They ask questions and they don't get an answer. Or I had one conversation yesterday where the client talked to his CPA, and basically the client told him all the things he should be doing. The CPA said, yeah, you're right, we should do those. And that's not the right kind of relationship. So what an advisory engagement should look like is us coming up with a game plan and then having that pathway to that future success, and that success being exiting the business for a good outcome, whether it's lifestyle or a big number, at the end of the day, whatever that is. And so advisory services can be defined. And I think as firms, we tend to want to kind of frame everything into a tax return kind of process, right? You have to do A, B, C, D, E, and then, the next, you have your outcome. Advisory can be that way, but it's got to be defined and it's got to be structured in such a way where you can vary it a little bit, but it is something that can be structured, and it's a model that you can create. That's what we spent the last 5-6 years developing, is that roadmap for not just the upfront, because there's value in the upfront conversation, but we have relationships that are 8, 10, 12 years old, and clients still come to us, or, clients, I say, not customers, they come to us because they want access to us, and they know that they're going to get value from that conversation, and they view our relationship as an investment, not as a check that they write as an expense. They're getting something out of it. And that's because we have a pathway to the conversation, not just from an onboarding, but from an ongoing perspective and an eventual outcome where they're exiting.
I really appreciate you taking the time to explain that, because for my listeners, I'm sure they're experiencing something that I experienced years ago, which is, what is it that I'm offering that they're willing to pay for? And one of the challenges that I personally experienced as I was moving into this value place is, years ago, I had worked with business coaches, and I experienced multiple things. One was, I had a coach that would adapt to my current situation, and they, because of their experience and wisdom, were able to offer things, but it was always ad hoc. It was never a structured process or system that we were going through. I was just simply sharing with them what it was that I was going through, and they had suggestions and ideas and experience to offer. It was extremely helpful, but I wasn't going anywhere. I was simply leaning on them when I needed them. There was another experience I had with some other coaches where there was a system, a process. There was an end game that we were working towards. And that was something that I was very pleased with, because as I did that engagement, I knew what was going on month 6, month 9, month 12. So when
Right.
I did our engagements and built our advisory services, what we did is we ended up creating basically that engagement experience that we could sell the customer, tell them this is what you're going to experience, and give them the big picture of here's where we're going to take you as a journey. And
Right.
one of the things that was very helpful is we could give them a picture of here's where you are and here's where we're going to take you. And that end game, that appealed to them. They were like, I want to go on this journey. I want to go to Disneyland. You can get me to Disneyland. Take me to Disneyland. And all
Right.
of a sudden, they got excited about it and they were willing to, like you said, pay for it. So the point that I'd just like to end on is ours ultimately ended up being 5 things: engage and manifest, understanding accounting, increasing revenue, improving profits, and building value in the business. Those 5 things we were able to incorporate. And what was nice is when it came to month 4, I wasn't scrambling and wondering, what am I going to do in this next meeting with this
Yeah.
client? I knew ahead of time what I was going to do. Now, I did adapt based on the client's
Sure.
needs. Maybe month 8, we're going to do on month 4 for this particular client because of the circumstances. But otherwise, I had a structure, a journey that I could take my clients on. And like you pointed out, it's not just a single year. Yes, the engagement was originally signed to be a 1-year engagement, but I say in the terms, this will take 12 or more months,
Right.
because oftentimes I'll go to the client and in month 5, teach them something that they need to do in their business. And it took us 3 months to implement it. Well, that added to the duration of the engagement.
Yeah.
But the point is then I worked with these clients for 3, 4, 5 years. Why? Because of the dependency they came on the expertise that we were bringing to the table.
Yeah.
And oftentimes in the engagement, we revisited things that were previously discussed because now they were applicable and we had to
Right.
revisit them. So I love this part of the conversation because I agree. As accounting professionals, when we package our commodity of bookkeeping services, we know what we're doing every month.
Right.
When we're offering CFO and advisory services, tax strategy services, it can be a little bit more creative and ambiguous. And what I like is to be able to offer something that is a little bit more structured so that I'm organized and my client has a genuine experience that's similar to my other clients. Get your copy of Red to Black. It is the book written for accounting professionals to help businesses turn around and go from being in the red to being in the black. This book is written for consultants, business owners, operators, and managers. No matter what your client's product or service, or irrespective of your talent, skill, or expertise, as an accounting professional, you'll be able to use the principles presented in this book to actually become, for your clients, the profit and growth expert. Every chapter is filled with principles and concepts that you can use immediately with your clients to lead them from being in the red to being more profitable in their business, and see you as, in fact, their guide, their coach, with the expertise and wisdom that you can bring from this book. In the book, you have how-to guide explanations. You have models that you can follow. You're shown how to actually calculate and determine the fees for your services, the actual model that you'll use during the implementation of all this, and most importantly, the end-all results with your clients. Get this book now and see what it is you can do to offer this new revenue-producing service as, in fact, the profit and growth expert. For more information on how you can take advantage of this offer, go to the episode description and there get the information you need to take advantage of this today. So here's my next question for you. When you're offering this, I have 2 things I'd like my audience to understand. How much time are you actually spending each month with a given client? Is this a 1-hour type thing, a 3-hour meeting, 2 meetings a month? And
Yeah.
the second question is, what is the fee for that service? You spoke of an onboarding fee
Right.
and you spoke of a recurring monthly fee. What is that fee they're paying for that monthly experience? So tell me those two things.
Yeah, so our level of services, I don't equate them to CFO level services because we're not going to
Okay.
be in their business a few times a month or once a week, so on and so forth.
All right.
When I position our services, I tell people to think of us as professional board members.
Okay.
We deal with over 500 businesses on a regular basis as a firm. We have 6 advisors that work with clients. So we know a lot about business and how to run businesses, and we don't specialize in any one particular niche. We have lots of niches because the business owner can teach us about the business and the nuances of the business. We know financial statements.
They're the
we know
expert.
tax planning. That's right. They're the expert. So when we talk about how often they need to meet with us, this is absent the bookkeeping, because the bookkeeping is a month,
Of course.
right?
Yeah.
So from a tax planning and advisory standpoint, we meet with our clients anywhere from 1 to 3 times a year. Okay. One at a minimum is going to be tax planning that typically happens between August and the end of the year. And of course, we look at taxes as a multi-year event. We don't look at this year only, because there are things you do this year that impact future years, vice versa. So we need to know what's happening with tax laws, the situation with the client. So it varies. And the complexity of the engagement will drive the number of meetings. So if they have a lot of things going on, multiple businesses, real estate, and whatever they have, that could drive multiple meetings that are tax planning or strategy type sessions.
Good.
In addition to that, we have what we call an accounting check-in. If we're not doing the bookkeeping, if somebody else is doing the bookkeeping, we want to look at the books at least twice a year. So mid-year, when June is done, we'll pull the numbers and we'll analyze them, and then we'll come up with, some ideas and thoughts about, what might be getting astray or things that we need to look at. And then again, when we're doing a tax planning, we look at them again, because I don't want to wait until it comes time for us to prepare a tax return for that to be the first look we have at their numbers, right? There's too many problems that come with that. So, we originally started our advisory services thinking we were going to do quarterly meetings with clients, but our typical client is a small business owner with maybe $250,000 in revenue up to 5 to 10 million in revenue.
Okay.
So we thought we were going to do quarterly meetings, but we found that there wasn't enough value in having that frequent of a meeting cadence. And so we backed it off to 2 times a year or 1, depending on the need. But there's a lot of touch points throughout the year, because in our engagements, we build into them, right, wrong, or indifferent. People get scared when I say this, unlimited communication with us. So if you have questions, we're here to answer, and we're not going to give you a bill for a 5-minute conversation, because we build that into the ongoing advisory fee that we charge. Okay. Now, hopefully, if we're doing our job right, the upfront engagement will handle and probably answer 90% of those quick questions that come up, because we know what they're going to be. And so we're getting ahead of the game there, and we're coming to the client with suggestions rather than waiting for them to ask us questions that we have to respond to. And so, we tend to not worry about that unlimited engagement, because people don't use it. Now, they come to us, rightly so, before they're making decisions rather than after the fact. They're not sitting in the dealership and say, hey, we just bought a car. Did we title it the right way? We're having those conversations before they go out and do that, so that we can say, okay, this is the right way to do it for your situation. And it's not a one size fits all. So in that light, our upfront engagement, and I also hesitate to quote fees, because I don't know the situation and it depends on the complexity.
Just give us an average.
Yeah. And so, it's almost like asking me how much is in that bag of groceries. Is it hamburger, or do you have ribeyes in there? Right. So I don't know. But typically our planning engagements start at around 3,000 and go up from there based on complexity for the upfront fee.
Yep.
Ongoing, at a minimum, we charge for business and personal tax return prep. We charge for a minimum, what we call the accounting check-in, where we're looking at the numbers, and then tax planning. And so that goes into our maintenance agreement, and that will be anywhere from, let's call it 6,000 a month up to 50,000, 6,000 a year up to 50,000 a year. Again, It depends on the complexity. The real variable is how many entities they have. If we're doing a lot of tax returns, obviously the fee is going to go up. The planning might be a little bit more. So it's kind of a broad range, but I'll tell you that when we were a transactional firm, I'll give you an example. I had a client that we used to do his S corporation return. We'd give him a bill, it was $5,000. Well, the reality was it wasn't $5,000 for the tax return. We had a couple meetings during the year. We did tax planning. We had other things. That was all rolled into this flat fee that I gave them. And if they took that down the street to another CPA firm and said, how much would you charge me to do this tax return? It's going to be way lower than that $5,000. And the problem is I never defined the scope of that relationship when I gave them that bill. And so one of the first things we did is those existing clients, we defined what we were doing for them, so that if they ever wanted to compare fees from somebody else. They got the true pictures of apples to apples comparison instead of tax return versus a lot of planning and advisory. And so important to define scope in what you're doing when you're talking about engagement, because somebody that engages a firm for tax prep, they think they get everything in your head for that fee they pay you for the tax return, and that's not necessarily the case. So this allowed us to kind of have that separation between this is what we do for you for preparing a tax return, and this is what we do for all the other things, planning, questions, that we do. So.
Well, I appreciate you taking the time to explain that for a few reasons. And for my audience, I'm going to point this out. One of the things that I think is very important is in our engagements, it is imperative, in my opinion, that we are very clear as to what it is they are paying for and the associated fees for it. To give them a $5,000 bill for an S Corp and not itemize it as to what it was that was the advisory versus the actual preparation can be something that will eventually bite you. So I do want to point out that I think it's important that the client, the customer, knows what they did. And there is a distinction between advisory and preparation. And so I think that's very important to point out. The second thing that I'd like to point out is as it relates to the experience that you shared as to what it is, I just want to share what I'm familiar with. When it comes to tax advisory and tax preparation, generally speaking, and I'm just speaking in simplistic terms here, first quarter is spent doing the preparation. Second quarter is visiting with any of the clients that were flagged in the course of the preparation that had missed opportunities in their tax return that could warrant an amendment. Maybe it's something that was a missed opportunity that we want to address so that it's not lost this year. And so we're meeting with a portion of those returns that we filed in the first quarter, in the second quarter, to say, here are some missed opportunities that we need to address so you don't lose out on them again this tax year. Third quarter is generally we're going to do the tax strategy. We're going to meet with the client, figure out what the game plan is as to this year. What can we do to minimize some of the tax liabilities that they're experiencing? Come with a strategy of here's what we're going to do this year moving forward, perhaps some different things that we haven't done in the past. Fourth quarter, we're going to meet with them just before the year ends because most things are going to be, December 31st affected. So what we're going to do is we're just going to figure out, is there anything new that's come to light before the end of the year? Are there any year plans in the coming year that we can accelerate into this year and actually utilize for the tax purposes? There's just some strategies that are going on in that fourth quarter meeting. Well, like you were saying, this is outside of the tax preparation, and this is a fee that they're going to be paying for it. So as it relates to tax advisory, we're going to meet with them ideally third and fourth quarter, and then clearly we're meeting with them in the first quarter as it's being prepared if extensions aren't being done. So that just gives kind of a high level what that experience with the client may consist of. But as to pricing, when we're looking at CFO and advisory services, perhaps tax strategies, one of the things that we have found is the national average is $2,500 a month is the accounting average. Well, if you take $2,500 and extrapolate it over a year, those annualized revenues, they add up. They do actually come up. And so what we're looking at here is, what does that consist of? It's not bookkeeping. It's not accounting. It's not tax preparation. That is simply the advisory things that we're doing as an average, $2,500 a month. So the bookkeeping service is above and beyond that. The accounting service, above and beyond that. The tax preparation, that is above and beyond that $2,500 average that we're doing at that advisory level.
Learn the turnkey process for starting and building a successful accounting business. It's in this course that you'll actually experience 4 specific trainings. Part 1, your business plan, everything you need to know to get started. Part 2, how to price your services, the pros and cons of different methods and the best way to price your services that are both profitable and professional. Marketing and selling your services so that you can actually be top of mind, but more importantly, how to actually be seen as a trusted strategic advisor. And last of all, mapping it all out. 5 principles in running a profitable business so that you can be both competent and confident in the services you're providing. Learn now what it is you can be doing to start and build your own successful accounting, bookkeeping, or tax business. Go to the episode description and there get the information you need to take advantage of this today.
So I think these things are at least contextual simply for my audience to understand how can they compare to what it is they're doing. And it brings me to my next question for you. When working with accounting professionals and they're in that commoditized space of doing bookkeeping work, tax preparation, how do you get them to see the vision of moving into advisory when they're perhaps hesitant? I don't know everything. I don't have all the answers. I'm not the expert of their business. Why would I go in there and portray myself as someone that they could pay to give them all this great insight?
Yeah.
What would you advise that accountant to understand about what advisory is and why they should consider offering it to their clients?
Yeah. So I would challenge that firm and tell them that they already do have the answers. They just don't know that they have the answers, right? They just have never thought it through as to what the value of those conversations are. I will challenge them to think about the last question they got from a client, and were they able to answer it? And then is that something you could maybe had a conversation about before they had the question and charge for it, right? The answer is yes. Most of the time, those firms, we don't. We react. We don't build them for the conversation, or maybe we. So here's an example. This was my kind of eye-opening experience. I had a client that was a Schedule C filer. They were making $100,000+ profit on their Schedule C. And so what's the conversation, right? They ask me what we can do about saving taxes. Immediately I go to, well, we need to make you an S corporation, right? Take a salary, structure the compensation, so on and so forth. So I went through that exercise, told them this is what we're going to do, and saved them probably $5,000 to $10,000 a year by giving them the answer. And what did I get for that? I did not charge them for that because I did not have that advisory service structured and productized and figured out what the value of that is. I should charge him for that conversation, what that number should be. And so that was my, aha moment in this thing. It's like, man, I need to do this because we're having these conversations every day that save people lots of money. And the client's going to keep asking you questions until you stop, because they don't know any different. You're their tax guy. They're going to ask you questions about taxes, whether it's planning related or tax return related, because they just want answers. You have to be able to say, this is planning, this is part of your tax return, two separate things. And then you figure out how to productize it. And it starts, I think, with defining who you want to do business with, right? What's that ideal client that you want to have? And what would that relationship look like if you were able to charge for what you think the value is of those conversations? And just pick a number. Start with something. It doesn't have to be perfect, because when we first started, our number was way up here. We came down here, and then we backed it back up, and it's been going slowly back, to the high side. The key there is start somewhere and start charging for those conversations that you're having, where you're giving it away for free. And you do know these things. And what we do for our clients, we're not moving mountains, okay? They're business owners. We know tax. We know tax planning. We know businesses and financial statements. We can help them with that. They're trying to find answers on TikTok or Google or YouTube, and they're getting probably wrong information. Well, we've got the right information. Come up with something that makes sense to you and that you're comfortable with. It doesn't have to be high-end strategies. It can be basic stuff. Like our basic upfront engagement is teaching a business how to behave like a business and be tax efficient. We know that stuff, right? Everybody that's watching this and has a firm probably knows everything that's in our engagement. They just have never put it to paper and said, this is an offering and this is what I can charge for it.
I'm loving this. This is very helpful. So I'm going to add to what you just shared with a few things. One, you don't have to be the expert. The business owner is the expert. That's why it's their business. So at the end of the day, it's not important what the answers are. It's, are you asking the right questions?
That's right.
And with that, I think you more confidently go into the business and actually start asking the right questions, and they'll appreciate your perspective and insights, because you're going to be asking them things that no one else is asking. And it will help them to think outside of the box that they're continually in on a daily basis, because you're helping them now work on their business. So that's the first thing. Second thing is, you're right. One of the things that I think is natural is our experience over time gives us a great deal of information, wisdom that we as accounting professionals can bring to the conversation. And oftentimes we don't appreciate where we got that experience, that wisdom, that understanding. And it's through education, it's through training, it is our profession. And so sometimes we don't see value in what it is that comes so naturally to us because we've been doing this for so long. So what we need to do is actually start seeing, okay, how do I package this so I can delineate when they're getting ready to cross the line and say, you know what we're discussing here is typically covered in my accounting package, where we do the analysis of the financials and I start looking at margins and start giving you feedback. I can answer your question, but if this is something that you see important for your business, let's discuss that as an additional service that I regularly do for you, which will have this additional fee. And it naturally causes this conversation to evolve. You get to taste it, you get to appreciate it, and now you get to pay for it. And so that's one of the things that I think is very important. So the last thing I want to do here is we start to wrap this up because we've had a phenomenal conversation, is ask, what advice would you have for the accounting professional as you see the short-term future ahead? We've got AI on the cusp. We've got all these things that are transforming the profession. What advice do you have?
Yeah, so there are a lot of tools out there that can help you define or create advisory services. So there's a lot of noise there, and you have to pick some that make sense to you that you can use. But those are just tools. You still need the human to interpret the information and to convey that information to the client. That's what you have to get good at. You have to get good at using the tools and then figuring out how you can use that information to help the business owners, be successful. A lot of our clients just want validation for the things that they're doing, and we can help them with that. So I think that's the most important thing. Avoid the noise and don't get too caught up in, there's this new shiny object out there that can do this, this, and this. You don't necessarily need all that. You just got to figure out how to package it. And again, these are things that put it in some sort of form where you're getting paid for the value that you provide rather than just giving it away, because it's just so natural for us to just give it away and not get paid for it. We have lots of years of experience, lots of training that we go through. There's real value in that. Put it to paper and start charging for it because clients want it. Business owners are looking for information. They want answers. They're finding it in the wrong places. We are the experts and we can provide this and be very successful with it. We built a firm on it and we've been highly successful doing it. And you know what? It's easy. Once you start doing it, it gets easier and easier. So you got to start somewhere.
This is great. One of the things I'd like to do is invite my listeners to really kind of step back and consider this, maybe even re-listen to this conversation, because I think it's a worthwhile thing for us to consider. And Mark, our time together has flown by. This has been a phenomenal conversation. So I'm going to start wrapping this up. Yeah. One of the things that I'd like to do is, as a special offer, we've got a few things here that Mark's offering. First of all, is a tool that firms can use to gauge where they are with delivering advisory services. This is a PDF. In order to get this, you need to go to the episode description, and there you will find the PDF information that you're needing to actually assess where you are as you're ready to deliver advisory services. And then the second thing is, if you're struggling with the execution and delivery of advisory services, he's offering to basically have you get in touch with him. You can go to businessadvisory.com or bizadvisory.com, and you can find out more information about how to contact him. And that information will also exist in the episode description. In addition to that, I want to invite you to participate in the Accountrepreneurs Challenge. The Accountrepreneurs Challenge is exactly what we've been discussing today. It's how you can actually level up, take that next step in your accounting career and offer these additional services. It's really building what I refer to as the premier accounting firm in your area. The Accountrepreneurs Challenge is free. It is what you can actually sign up for, where each week there are activities, things that you can do to work on yourself and your business. It's here that you're going to be introduced to what it is that you as a professional can be doing to get paid what you're worth. More importantly, what you can be doing to offer quality services to your clients so that you can not only get paid what you're worth, but retain them longer. These things are discussed in the Accountrepreneurs Challenge. And one of the things that I encourage you to do is participate. Some of the weekly exercises are literally just a few minutes, 5, 10, 15 minutes. Others might be reading a book, going through a quick course that might take you an hour or so to complete. Either way, these are things that you can actually work on over the next 90 days to make this the best year yet in your accounting career. So sign up now for the Accountrepreneurs Challenge. To do so, you can go to universalaccounting.com/podcast, or just go to universalaccounting.com and in the free resources, find the Accountrepreneurs Challenge. The second thing I'd like to do is invite you to GrowCon. GrowCon is an annual conference for owners of bookkeeping, accounting, and tax businesses. As an event, it's here that we hear from the experts, those individuals that can give us insights as to what it is we can be doing to work on our business to offer quality accounting services. Topics will range from marketing and selling to help you get the ideal clients that you're working to get, effective marketing strategies that you can implement now. The other thing is that we're going to be talking about client services. What is it that they're willing to pay for, what you should be charging, what it is you can be doing to not only get clients, retain them, but get paid what you're worth. Lastly, we're going to be talking about production. We're going to have individuals addressing things related to working more efficiently and effectively, tech stacks, training your staff, and obviously building a profitable business. So join us and actually work on your business at GrowCon. It's here that you can build friendships, collaborate, work with people who are thriving in the profession, as well as my staff, so that they can help you, those individuals who are committed to your success, willing to help you actually be in business for yourself, but not by yourself with Universal. So definitely take some time, register now, go to universalaccounting.com, and in the navigation, get the details for GrowCon, register, and I look forward to seeing you there. Lastly, with regards to this, let me do a quick summary, and then I'm going to come back to Mark for a closing thought. I really felt it was quite interesting to hear Mark talk of his evolution from being a CPA, not really diving specifically into the accounting world, but going into corporate America and banking. But then he had that opportunity to actually acquire a firm. And doing so, he saw, well, heck, why not, why just one? Let's get three more. So we talked about, obviously, what to look for in a business when acquiring it. We talked about, first of all, valuing the business at the revenue level, but more importantly, what we could do to perhaps look at it from an EBITDA perspective. We talked about how to value that business from the different client types, ranging from a customer versus a client and types of clients. I thought that was a phenomenal conversation and something that we ought to consider and reflect upon as we look at our own client base. We talked about how to value a business as it relates to not just the client list, but also at the same time, the employees that work there, whether or not they're a great addition to our firm as we have that cultural integration, bringing them in-house. And then as well, the SOPs, the platforms that are being utilized by the firm, do they quickly and easily integrate with the platforms we're already utilizing? These are very important considerations to actually have as we're acquiring a business or ultimately perhaps selling it. We talked about exiting the business and how to actually work towards building, or beginning with the end in mind, building the business that has the valuation that we would ultimately like it to have, because there is a discrepancy between what it may be valued as and what we think it's worth. So I think that's something to also consider. We also had a conversation about advisory. What is advisory? What is it that we're doing that's different than compliance? We actually had that conversation about Mark's journey from moving from just doing tax preparation to now doing more tax advisory work and what that looks like. I appreciated him sharing his insights as to what that client relationship looks like, how often he's meeting, and perhaps a little bit of an idea of what he's charging for those services, just to give us all some context. We also kind of got into what are the averages that are going on out there. And I shared what we do here at Universal as it relates to the client advisory work that we offer our clients. So wonderful conversation here. Lots of insights. Mark, what would you like to end with?
Roger, well, again, thank you for having me on the podcast. It's been great experience for me. I think the one thing that I can add to this is that if you're a firm owner and you're trying to figure this advisory thing out, first, reach out to me. I'm happy to help you. But just start by defining what that ideal client relationship should look like and start to drive toward those type of engagements. And that can start with your next new prospect that comes in the door. They don't know you, any differently than anybody else. So start by having a different type of conversation, get less transactional and more proactive in the way that you engage with that client, and see where it goes. It's going to evolve. It doesn't have to be perfect right out of the gate. Just start somewhere, and it's with that next conversation you have with a prospect.
I love it. Excellent challenge, and I invite everyone to take advantage of it. Do something. So with that said, I want to actually first invite you, if you haven't already done so, subscribe to the podcast. Love to have you subscribe, set your notifications to get notified each and every week as we release a new episode. It's here again that we have the experts to share with us things that we need to consider as we're running our businesses and, in fact, building the premier accounting firm. So subscribe now. Also, again, join us for GrowCon. Go to universalaccounting.com, and in the navigation, get the information you need and register. And I look forward to seeing you there at GrowCon. In addition to this, one of the things that I think would be very appropriate to point out is becoming a profit and growth expert. If you're interested in offering advisory services and want to get the know-how of how to market, sell, price, and offer this service, go to universalaccountingschool.com, and there you'll actually find information regarding building your business and, in fact, beginning to offer CFO and advisory services. Become a profit and growth expert. Actually learn about the universal business model, and with all that, focus on the things that you can do to complement your current accounting services with advisory work, and take your business to another level, getting these quality clients that are paying you these recurring engagements. So with that, go to universalaccountingschool.com or give us a phone call. You can call us at 801-265-3777 and ask about becoming a profit and growth expert. So with all that being said, have a wonderful day. Be safe out there, and always remember, accounting success is universal. Take care.